It turns out the easiest way to make a self-driving robotaxi profitable is to just stop paying so many humans to babysit them from a control room.
Yeah, the unit economics definitely improve when you remove the biological bottleneck.
Right. So looking at the date, it is March 23, 2026. We are digging into WeRide, ticker WRD, and their Q4-25 earnings. And Miro, this is it is quite the paradox of a quarter. Revenue went absolutely vertical, up 84% sequentially to nearly $45 million US. But at the exact same time, net losses swelled by over 80%.
Yeah, well, look, it makes perfect sense if you separate the paper math from the physical metal. Product revenue skyrocketed. It was up 167% from Q3 because they're just stamping out these vehicles now. But there is a catch because that hardware volume totally drowned out their high-margin R&D software services. The blended gross margin got compressed. It dropped to 28.5%.
Sorry, wait, 28.5? It was almost 33 last quarter.
Exactly. So your margin profile degrades from the revenue mix, and then you layer on a massive spike in share-based compensation. Their SBC basically tripled this quarter. That is exactly what blew up the net loss line. They reported a $79.5 million loss for the quarter.
Which I guess totally explains the whiplash on the tape today. I mean, the stock fell out of bed at the open, flushed all the way down near $6. Then someone obviously read past that headline loss because the buyer stepped in and drove it all the way back up to close flat, slightly green actually, around $6.92.
Right, because the market panicked over the loss, then realized the actual cash burn is incredibly low. I think they burned less than 200 million RMB. They're sitting on $1 billion in total capital reserves. You do not worry about paper losses when the runway is that long.
That is a serious cushion. And, just to drop our usual housekeeping right here while we talk about billion-dollar cushions, this is entirely our personal opinion, definitely not financial advice. So please do not go trade autonomous vehicle stocks based on our banter.
Definitely not. Do your own math. But the math here is fascinating because of the operational leverage. You mentioned the babysitting at the top.
Right, the teleoperations ratio.
That is the real operational unlock this quarter. They took the human remote assistant requirement from 1 to 10 down to 1 to 40. That drops their per vehicle labor intensity to basically nothing. Add to the fact they're building these GXR robotaxis on a Geely assembly line in under 10 minutes apiece.
Wait, under 10 minutes?
Under 10 minutes, fully integrated, no post-production retrofitting required.
I think I waited longer for my latte this morning. So one human watching 40 cars built faster than you can get coffee, that completely changes the margin ceiling.
It really does. And the proof is not theoretical. The CFO quietly dropped a massive data point on the call. Their Middle East subsidiary is already operating at a standalone profit.
Whoa, an actual profitable robotaxi unit, because the entire Silicon Valley narrative is that this tech is just an infinite money furnace. All right, let's get into the details on how they actually pulled that off.
It comes down to basic denominator math. If you cut the remote safety driver requirement from one person watching 10 cars to one watching 40, you essentially vaporize the heaviest ongoing operating expense.
Right, because humans are expensive, even when they're just sitting in a control room staring at screens.
Exactly. But it is not just the labor side. They managed to drop the overall total cost of ownership, the TCO, by 38% this cycle. A big chunk of that actually came from hardware. They knocked 15% off their bill of materials by moving to this proprietary HPC 3.0 platform.
Okay, yes, but lowering hardware costs makes sense to me. Scaling up to one human per 40 cars is what sounds wild. I mean, how do you safely ignore 39 autonomous vehicles while handling a weird edge case on just one?
Well, you do not ignore them. The AI has to be good enough that it rarely asks for help in the first place. And they're solving that through simulation. They have this system called WeRide Genesis.
Genesis? That sounds very sci-fi.
A little bit. It integrates physical road AI with generative AI. So instead of driving millions of literal miles on real roads to find bizarre edge cases, they just generate them virtually. It cut their simulation setup time from days down to minutes, and data collection costs dropped by something like 75%.
That is kind of brilliant. They're essentially hallucinating traffic problems in a server farm so the car knows what to do in reality.
That is one way to put it, but it gives them a massive advantage over companies trying to brute force this stuff with physical miles. And CEO Tony Han was surprisingly blunt about this on the call. He went straight after the pure software players. You know, the guys who just buy off-the-shelf NVIDIA chips, strap them to a generic car, and hope the math works out.
Which is, let us be fair, a huge chunk of the Silicon Valley playbook right now.
Yes, let me read you the exact quote. He said, "I don't think like just a general, very generic, universal platform can help the inexperienced to democratize the whole industry. No, it's not like that."
Oh, ouch. He is basically saying you cannot just be an integrator. You actually have to build the whole brain.
Right, except he is not just talking big. They backed it up domestically. To prove their tech against the giants, they entered the China Urban Intelligent Driving Competition and completely swept it. Handily beat heavyweights like XPeng, Li Auto, NIO. They won the national championship 3 times in a row. That actually broke Huawei's old record.
Wow! Okay, so they definitely have the bragging rights at home. But that also explains the Middle East success, right? You take this highly optimized, purpose-built tech, you drop it into environments like Dubai or Abu Dhabi, where they have legal monopolies on the pilot zones.
Exactly. Geography matters. Combine a pilot monopoly with a 38% lower cost base, and suddenly your subsidiary prints cash. Plus, they are heavily embedded into Uber now.
Wait, I wanted to ask about that. How exclusive is that Uber partnership globally?
CFO Jennifer Lee made a huge point about it. If you open the Uber app today and want a robotaxi, globally, there are exactly 2 companies deeply integrated enough to give you one directly on the platform. Waymo in the US and WeRide. That is the whole list.
That is actually wild.
Right?
Only a 2-horse race on the biggest ride-hailing platform on Earth. So if the unit economics are genuinely working overseas and they have that massive Uber pipeline ready, where does this leave their trajectory heading into next year? Are they just going to copy-paste this profitable model everywhere else?
Yes.
I mean, copy and paste is maybe a bit generous. Geography is messy, but the guidance is it is incredibly aggressive. They expect to take the global fleet from roughly 1,100 today up to 2,600 by the end of next year.
Right, marking the first phase of, what do they say, tens of thousands of robotaxis by 2030, which is a huge flex for a company that technically still loses money, but then they threw in this $100 million stock buyback program.
Yeah, that is the ultimate confidence signal. You do not authorize a buyback as a pre-profit autonomous vehicle company unless you are absolutely certain your sub-$200 million cash burn is sustainable. They are basically saying our balance sheet is untouchable right now.
True, but scaling internationally is not cheap because I was looking at their administrative expenses, excluding the share-based comp. Those were actually up over 30% year over year, and management directly blamed that on legal compliance services.
Exactly. Operating in 12 different countries means 12 different sets of regulators. Plus, you cannot ignore the geopolitical elephant in the room. They are scaling Chinese-programmed hardware globally right when Western governments are putting up walls.
Right. The CEO kind of hand-waved the geopolitical risk today, but if you have thousands of these cars rolling around European hubs, regulators will absolutely start paying close attention.
They will, but Tony Han also threw down this gauntlet on the call that I actually loved. He said, and I am quoting here, "If you just have 10 cars and a safety driver, you cannot claim yourself as a robo-taxi company. You need at least 50 fully driverless cars in a city of 1 million people to even count."
Wow. He is so tired of the pilot program theater. He just wants the real deal.
He really does. And frankly, with a targeted contribution margin over 40% in China, they might just get it. It looks like they're betting their entire next year on raw execution over PR.
Well, if they actually pull it off, we might have to let one of their robots drive us to the studio next year.
Only if it makes coffee in under 10 minutes.
Deal. All right, we will leave it right there. If you want these earnings breakdowns to just show up automatically, go ahead and follow the show. And as a quick aside, this podcast is generated with AI tools, really just to prove we can turn massive financial reports into a normal, listenable conversation. For any ticker requests or feedback, shoot us an email at earningsunscripted@datamadness.ca or grab the X link in the show notes. Thanks for hanging out with us, and we will see you next time.
See you next quarter.